Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Joe Tigay, managing partner at Equity Armor Investments, and we're going to take a look at tech stocks and how they could potentially outperform if we don't hit a full-fledged recession. Joe, it's great to see you as always. Welcome back to Trade Talks. Before we get into that, let's talk about Nasdaq 100 performance over the past month and why you're really focusing in on tech versus what you're seeing in bonds.
Yeah, it's been really interesting. Of course, we've seen the back end of the curve coming down. Yields have been coming in as bond traders have been pricing in a recession. Now, you go back to the past 10 years, lower long-term yields, mid to long-term yields have been good for tech stock. The borrowing-heavy industries, the growth industries really do well when interest rates are lower for them to stimulate that growth. And of course, the past month has been no exception. And that's kind of been buoyed by the CHIPS bill out of Congress. I think we were looking forward to that, and the market really got a bounce once that finally came through.
And Joe, you make an interesting point in your notes here that while inflation may have peaked, we still have a way to go to get down to that 2.5% target.
Yeah, I mean, it's pretty clear that there's signs that inflation is peaking, but inflation was extremely hot. We're talking about the hottest inflation in 40 years, 11% inflation. Yeah, okay, it's peaked, but if we're at 6% inflation, that's still way too high. We need to get that down all the way down to 2 or lower, like the Fed's goal. That's really, like, for long-term feasibility, it has to be below there. So for me, even if inflation's peaked, there's a lot more room for the Fed to go before it really gets under control.
And you had mentioned that if the economy doesn't collapse into a full-fledged recession, that tech stocks could be the place to be. Why is that?
Yeah, and we say full-fledged recession, technical recession. Yeah, I mean, it doesn't matter. Clearly, the economy is slowing down a little bit, and the question is going to be, can we avoid the worst of it? Can we stimulate somewhere? Can the consumer pick up a little bit of strength somewhere before it gets worse? And yeah, I think I'd love to be if the economy is going to turn around and stabilize and go and get better. I want to be in tech stocks. I want to be in these growth stocks. Of course, if we're going to have all this money now, new money coming back into the economy from these 2 new bills that we're expecting out of Congress, I think that's another catalyst for tech stocks to get out there and grow. I think that is the future, and we'll be looking forward to that for 2023 and 2024.
Yeah, I would imagine the sign that you don't want to see are equity traders kind of following along with what we're seeing in the bond market. In terms of the volatility complex, what are you seeing there, whether it's VOLQ, VIX?
Yeah, so volatility has come in the past month as this market's kind of recovered and stabilized here. That's what you would expect. But we need to remember we're still above 20 in the VIX, or 23, give or take, right now in the VIX. So that's still historically high, a sign that we're not out of the woods yet by any stretch of the imagination. There's still potential risks to the downside. Yes, we are slowing down in the economy. The question is, are we bottoming out, or is there another leg lower?
All right, Joe, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.